If you're sitting on the sidelines while the Fed cuts interest rates, what I'm about to show you could be the difference between massive gains and, well, watching from the sidelines, a bit like Winston back there, who's doing his best to hide himself under that table. Rate cuts are creating the biggest opportunity in growth stocks we've seen since 2020. And while most retail investors are confused about what to buy, I'm going all in on 8 specific high growth names across 5 red hot sectors. And by the end of this video, you know exactly which stocks I'm buying and at what levels and why each sector is the one that I'm looking at. I'm Felix Prehn, ex-investment banker. There is a Winston back there, and I've seen what banks do from the inside. And I've since founded the Goat Academy with over 20,000 students. I'm also the co-founder of TradeVision.io. And I've dedicated my retirement to teaching regular investors how to beat Wall Street out. And today, I'm going to give you 8 stocks across 5 sectors that could deliver massive returns as rate cuts fuel the next bull market, but only if you buy them at the right level. Now, this is not financial advice, so these are picks based on my strategy and my rules. And these are rules that I nicked from Wall Street, quite frank with you. People have been using these rules in a similar fashion for about 50 years. Big trading houses use them. And all I'm saying to you is you got to do your own research. You got to understand how this works. You got to learn the rules. And I'm going to give you way more information and golden nuggets than anybody ever has done on a YouTube video. So stick around. Now, we're looking at 5 sectors here. And just briefly, why are we bullish on these? We're looking at building products particularly. Fed rate cuts are a boon to building generally because lower interest rates is cheaper to build. There's also a massive housing shortage and generally infrastructure spending coming out. Gold rate cuts are bullish for gold. The whole geopolitical tension and so on, we get a bit more detail on that, is also bullish. And then April, which is just you going shopping or the wife going shopping. That's called consumer recovery. And people are also just spending a lot more stuff online, obviously. We also throw in a specialty retail. That was a tip from Winston back there, wasn't it, Winston? He's like, you got to put that one in. That's a good one. That'll make more sense for you in a moment. And then we've got biotech, which is just super interest rate sensitive. We also have some really cool treatments. And I'm not giving you the crazy ass biotech stocks there. We're looking at large cap or mid cap biotech stocks. So companies that actually have revenue and exist and not just like, a shed somewhere in the middle of somewhere. So let's jump straight into it then with our first stock. And this one's called Fortune Brands Innovation. You may or may not know them. The ticker symbol is always at the top of my presentation here, FBIN. My entry points here, I'm not telling you what to buy. That's basically the note I write for myself. I'll explain more of that when we look at the chart in just a second. But they make home improvement products pretty much in every American home. They own here these Moen faucets, Master Lock, Yale Smart Locks, decking, 4.6 billion revenue across those sectors. Pretty profitable for that sector, very nice free cash flow generation, and their margins are actually improving. Now, the whole smart home and the outdoor living trends are accelerating what they're doing, so we like it for that reason. Now, I'm going to show you the stock chart. But you know what, actually, before we look at the stock chart, people always ask me, Felix, how do you find these stocks? And I always say to them, well, join my free live training coming up in a couple of days, where I'll actually teach you the full thing from back to front without the disruption of particular stocks. We just look at the education part and the rules part, and you can grab yourself a free seat for that, by the way, at felixfriends.org/training. And if you do, you walk away a lot smarter. And that takes about an hour and a half or something like that, by the way. But it's well worth it because we don't get distracted by something that's sort of, shiny. We just look at like, where do we buy? Where do we sell? What are the rules? What are the sectors? And so on. So how do we come up with, hey, we want to buy construction materials essentially, or, home improvement products, if you call it here? Well, the first thing we look at is just type, and this is in TradeVision here, just type in construction ETF, and it'll give you 2, building and construction ETF, iShares home construction ETF. Both will probably be fine. Just click on the Invesco one. And this will tell you what the sector is doing. And this will tell you, is this a sector that Wall Street is putting money into? Yes or no? Put it in the chat. Write building, yes or no, it's money flowing in there. What is right? Building money or dollar symbols and money. You can do this in many ways. And what do you see? Well, you see that yellow line there that I put on the chart here. And this is going to be all, I'm going to just give you everything, okay? So stick around, write notes, take screenshots, record it, download it, do whatever you need to do. This is the 50-day moving average line. And can you see that until May, that was going down, and May it bottomed out? And you might say, well, that was the point to buy because that was the bottom of the market. Yeah, but nobody knew that, right? So forget about the bottom of the market thing. And then it recovered. And if you're wondering the other way, I'm not wearing a jacket today. My aircon isn't working. It's incredibly hot in here. Throat's also a bit scratchy. So we saw a bit of a recovery here, which was nice. And then we saw a couple of gap ups. There was one here. It's a bit small. There's a gap up here. And then secondly, we went across what I believe is a purple line with these funky glasses. Everything looks a different color. That's the 150-day moving average line. Why does that matter? That's basically the investors line. Okay, that's what matters really for investors. The yellow line matters more for traders. Now, it's still important because it's still a good risk management level, but that's kind of what we're looking at here. So most of you are probably more in the investor camp, right? Are you an investor or a trader? Put it in the chat down below. Investor or trader, or even both. You can identify as both nowadays. We don't judge people anymore for that sort of thing. I'm investor, trader, fluid. Is that the right way to put it? So we saw that little breakout there. And then I'm just gonna zoom in on that for you, because that is such a textbook nugget thing to happen. So we get that little gap up here, right? That was really nice. There was a little one here too. And then the stock goes sideways. And that's actually brilliant. That's actually exactly what you want. And then all you need to do is you need to connect the highs and you wait for the point for when it breaks out of that. And does it do it? Oh, yes, it does, right there. And that's really telling you this wasn't just some little mini recovery. Now we're really going. Now you could have, of course, bought it here. That would have been your entry point one if you really loved risk. Actually, your entry point number 1A would have been here, but that's crazy level of risk, and we don't like risk, actually. And this here would have been your 2, your sort of institutional level of investing. So what about now? Someone's going to write, it's too late, Felix. No, these kind of trends continue, in my humble opinion, and they're likely to. And actually, even the volume down here, we saw the largest volume we've seen in pretty much years, at least by volume, since we've seen it since like 2024 at that point. So home building is going to make a comeback. That's my prediction, right? So now we've got that. Now we got to look at what's a good stock in the home building and construction thing. And again, you could look at what's in the ETF, look at the couple of biggest players there, look at the charts, see how they're looking. And here is a chart that I found. And I tell you why, because while the sector, are you still with me on this? And we're getting a little detailed here. While the sector is still, the sector looks like that, right? We're like up here. But look at this one. This looks like this. It's hardly done a thing. So we're still at very much bottomish of the market. And that creates a glorious opportunity for us as this stock does its heartbeat thing, which is what they all do. And what are we looking for then? We're just looking to break out above those highs then. So what did I put on the presentation? I wrote 61.85 as the entry. And it's really confusing. When my mentors taught me this and they said, Felix, you want to overpay. And I'm like, I'm sorry, I don't want to overpay. I like to get stocks cheap. I don't know about you. And they're like, yeah, but how often do you lose? And I was like, oh, I see. So that would be more or less the entry point. So it's slightly above, or basically at the August 22 high, at the 5th of September high. So we want to go above that. We're going to go above where we've been. That's the entry point. So it's not a one thing to buy today. It's one thing to buy when that happens, by my rules. Doesn't mean you should run out and buy it, obviously, right? You can also follow news coverage and so on Trade Vision in here if you want. There probably isn't all that much on it, to be honest, because it's not that popular a stock. But it is one it looks like a potential beauty to me. And we go back to maybe not all the way to 2021, but let's just say, there is at least sort of 50% in this or something like that. That's kind of the way I'm looking at that. So is that helpful? Does that make some sense? We're going to go run through this a few more times. Second stock on the list is MAS, ticker symbol MAS, Masco Corporation. And they make faucets, paint, craft-made cabinets. In 50% of American home renovation products, they're the dominant brand with pricing power. And again, they've got exceptional return on equity. The profits are growing strongly, and they have a focus on higher margin products. I like that. So they're not trying to compete with whoever makes the cheapest junk. They're making brands. Consistent dividend growth, this strong cash generation. And you look at the chart here. Now, if you're wondering, like, why do I pick multiple stocks in a sector? I quite like splitting my nest eggs between a couple if I love a sector, because sometimes one stock doesn't do very much and another one does a lot. So it can be a good thing to do. And then we sort of double down on the ones that actually turn out to be the winner. So what's the setup here? Well, it's actually very similar, right? So the market bottomed out down here. You see that yellow line there. And then we've gone up a little bit. We're now zigzagging a little bit here. So again, we just want to break out above that level, right? We didn't quite do it as I'm recording this, but what was my entry point? It said here 76.35. So that would be, 76.35, somewhere there. Basically, it's always just slightly above where we've been. I mean, it isn't rocket science. And if you're off by a cent or two, it also doesn't matter. But you can just see where it's just above these highs here, and that's what we're looking at. We want to break out of that sector. So why aren't we just buying it right now? I'm sure someone's going to think that. Like, well, I'm just going to run out and buy it right now. First of all, don't, because you got to do your own research. You're responsible. If you want to be responsible for your winners, you're also responsible for your losers. And therefore, you need to take responsibility for your research and your setup and your risk management and your automations and all that good stuff. And I'll walk you through that in the live training we're going to do, because those are really fun and they're so impactful. So sign up for that one, felixprehn.com/training. What if it just does that for like the next 6 months? Well, I don't want to own the bloody thing. And I'll tell you why. Because my money will then be sitting in this and it'll return like zero. I'd rather it return a bit more than zero. So that's why we don't want to be in this. Now, if it starts breaking out above this, the likelihood is that it'll continue to do that. And then it might do that. And then it might go higher, right? So while patience is a good thing, entry points are very, very important, if you ask me. Now, we've got another one. We're going all in on the whole home improvement thing, right? Pink Panther Insulation Company. Ticker symbol is OC, Owens Corning. They make insulation for walls, shingles for roofs, residential doors. The leading position in energy-efficient building materials, which is a thing nowadays. Decent margins. They bought doors, 2024. Very strong pricing power. And yeah, the whole energy-efficient thing is a thing. I don't think that's going to go away either. So let's have a look at that stock chart together. And isn't she a beauty? It's like a textbook. So stocks come down a lot from wherever it was. It was up here in the 200. It's 25% below that. And it's basically been doing absolutely nothing at all since March, right? It's just been going sideways. So we're at February levels right now. So that's saying to me, brilliant. The longer this goes on for, the happier Winston is. Why? Because the longer this goes on for, the more of the people who wanted to sell have sold, and the cleaner the slate, and the more likely that we do get that nice, big, beautiful breakout, if we do get it. I'm not guaranteeing you a big, beautiful breakout, but that's how we set it up. So where do we want to enter on this one? When I say we, I mean Winston and I. About 159 and a bit, which is just basically just slightly above the recent highs. It's about that. It's looking quite good the last few days. So yeah, to me, this looks very good. This looks another good candidate, another good construction building materials type candidate. Now, we're going to switch sectors here. Why are we switching sectors? Because we're looking at something shinier. Now, first of all, you might be wondering, Felix, why the heck gold? Okay, gold is trading at record levels, right? Record gold prices, 2,600 something or other. Lower interest rates typically mean higher gold prices. Why is that? Because gold doesn't actually pay you anything, right? You hold it, you hope for appreciation. Whereas if rates are really high, say I can get 5% in bonds, then if I'm holding gold, I'm thinking, well, I'd like to get the 5%. Why don't I sell some gold and buy some bonds? But when the rates come down, that kind of opportunity cost goes away. We also have central banks buying more gold than ever, allegedly to fill the empty holds that got pillaged previously. That's, of course, not true, because central bankers are honest people. We also have massive ETF inflows. So if all you lot are buying those gold ETFs, well, those ETFs actually have to buy gold. We've had 5 months in a row now of money inflow into these gold and ETFs. So if we look again at the sector, there's different ways of looking at that, but just type in gold ETF, the top here, and you'll come up with a couple. Yeah, something like this will do the trick. Gold ETF, ounce, it's called. And what can you see? Well, it's going up, all right? It's going up a lot. But there is this whole period here, and I've been bullish on gold since March or something like that, if you've been following me. But there's this whole period here where we just didn't do anything. And we just did a little heartbeat thing. That's what I was saying. You don't want to be too early on these things. So what have we done now? We've broken out of it, right? It's like, yay, we're broken out of it. Amazing, exciting. Let's get some. That's basically the rationale. So we look at the sector. And then we look at, well, okay, we could just buy gold. I mean, there's an ETF called GLD. You could just buy that. But how much money does that make? Well, it just tracks the gold price. So say from March, when things sort of got a little bit moving here, on the February low, 28th of February, to right now, we're up, what, 27%, right? Let's hold the screen. Well, what about some of the gold miners? Look at something like Groy. See the same comparison point here. 28th of February, that was here. You get the idea? It's 183% up. Which one would you rather be in? The one that's 28% up or the one that's 183% up? Right? So, yes, I don't buy gold. Actually, I buy physical gold, some, but, leave it in a great big vault somewhere. One day I'm hoping I'll be able to swim in it. But don't you just love those cartoons? Those old Scrooge McDuck jumping into his gold thing? That was always my motivation in life, which is why I became a banker. But we got something that's a little bit less, well, this one's obviously run up a lot. So this is a little late, right? Now, we don't want to be really late. So here is another one. This one's called AU, Ashanti. Where are they based? AngloGold Ashanti PLC. It sounds very British, doesn't it? Well, the Ashanti part sounds more Indian, but you know what I mean. So from 28th of February, this thing is also up 124%. But we're still liking it. Why? Well, it's breaking out very, very strongly, very, very nicely. And look at the volume here on the way it's going up. So to me, this still looks good. Yeah, it's a little bit of a chasing entry, but long term, I'm very bullish on gold. So is this the right time to buy it? Well, first of all, you might want to ask, what do they actually do? Well, they dig gold out of the ground and they sell it. That's the business model. One of the largest gold mining companies, 11 mines in 3 continents. Where are those mines? They're in Ghana, in Tanzania, in Guinea, and Argentina, Brazil, and Australia. So they're kind of a global gold digger. And how do they make money? Well, it's a fairly simple concept, really. Dig, process, sell. That's it. So when gold prices go up, their profits become humongous, right? Because the costs are the same. The digging part, the processing part, the selling part, all costs about the same. So yes, the stock's up a lot, but it is a highly profitable business. 1.8 billion in net income on 7.6 billion revenue. They added some Egyptian gold to them just. Pharaoh's gold. They just got added to the Russell 3000 index, which is going to bring in some institutional money coming in. So we like it as a play. Now, there's another one, and I mentioned this one, I think a week ago in the video, but I thought I'd throw it in here again. This is DC Gold. So I had to get one of these. Someone was stuck and making a racket, weren't you? This is Tabitha, our chief gold researcher. This is how much financial advice this is. Kittens do all the research around it, don't they? Very good, actually, kittens. Make very good gold, commodity traders. And what have we just seen? Well, if you're observant, there's a little gap there. Now, a gap up is always a very, very, very good thing. So we like Dakota Gold for that reason. What do? Well, they're trying to do something a bit extraordinary. If you are in the US, South Dakota Used to be gold diggers territory, sort of Wild West gold rush type stuff, and they're trying to bring that back. So there is a mine or an area here which is called Homestake. Rather charmingly named, and lots of women are walking around with long blowing dresses and flowers on their hair and that sort of thing, whistling happily. Actually, maybe whistling isn't very ladylike, but you get the idea. It's been the most productive gold mine for 145 years. Dakota Gold believe there is a massive amount of gold left if you use modern extraction methods. So these guys are in the exploration stage. So exploration means we're hoping to find stuff. They're not producing gold, but they're drilling. They're putting up resources. But one reason I like them is because they have a lot of cash. So they have a strong cash position. I can't remember what it was, 45 million or something like that. And they've got, their feasibility studies and so on look good. Now, you never know whether there's anything there until you actually got a lot of the ground, but this is one of those things. So again, it's just running up with the whole gold thing altogether. If you might be wondering, well, I'm not going to hold that one forever. Well, we're going to talk about the forever bit in a second, because that's something we need to fix in everybody's minds, right? Now, the next stock, which is called Wheaton Precious Metals, ticker symbol WPM. You see how the pattern is almost exactly the same? So it almost matches exactly the same, because the sectors do move together. So you don't need to buy them all. But yeah, we're liking this one. It's just broken out exactly where we wanted it to break out. And, well, they're basically Netflix. But Netflix for gold mining. And that might need some explaining. Instead of owning mines, so they don't own no mines, right? No mining whatsoever. And what they do instead, they finance miners for a cut off the production at a discounted price. Really extraordinary stuff as a business model. It's sort of like gun to your head financing for mining businesses. So they say let me give you an example. They say they give you $100 million to a miner, to a mining company. And in return, the miner gives them 20% of production for 20 years. If you heard some screaming and crying, I've got cats, if you hadn't realized by now. And they might be able to buy that gold at $400 an ounce. Now, the gold price right now is not $400. The gold price right now is something like $2,600. So this is a very, very profitable venture if they get some gold out of the ground. So they're kind of like the landlord for, mining. And it makes them these extraordinary 70% margins, because it's just such a great, brilliant business model, right? No mining headaches, no environmental risks, no operational issues, no dust, no dirty feet. So 40% production growth by 2029 is what they're putting out there. Debt-free, which is also marvelous. 1.1 million cash position, and multiple new projects coming online over the next 2 years. So it's a pure leverage to metal prices. The more gold goes up, the more money these guys make, and therefore it's literally like a leverage play on gold, essentially. So it's an interesting one if you like a little bit more risk in your gold exposure. Now, next on our list, we're looking at retail. Retail, really? Consumer spending? Yeah, it's stabilizing. Inflation is going to hopefully calm down. That should help. And then e-commerce is it's like 48% of fashion retail now. It's extraordinary. So the whole AI personalization is going to improve margins. Why? Because what's the headache for a retail shop? They've got old shirts in the back in the wrong size. I walk in and I want a medium, and they've only got, extra large, or they've only got them in green and purple, and I only like buying blue shirts. So, that sort of thing. So with AI, you'll be able to customize this much more. You will actually know who your customers are. You will know this guy who walks in and only buys blue shirts in the same color. So why not order some more shirts in the same color? Or when you have them in stock, why not ping him, send him a coupon or something, right? And AI will be able to do all of that, but obviously sales assistants seem unable to. So let me give you two stocks in here, I think. The first is Land's End. Ticker symbol is LE. They make, well, polos, khaki sweaters, the sort of stuff that, you might see me in. But it's a uniform business. And they serve schools and companies nationwide. So it's actually a B2B business, no consumer involved, right? And maybe you remember those catalogs from back in the days when people were wearing, sweaters on boats, that sort of thing. That's Land's End, classic American casual clothing. And the catalogs went out of the window and they became online. So they now have a huge business selling those uniforms to schools and companies. That's their outfit as part of it. They target essentially, suburban parents, teachers, professionals who want quality, comfortable clothes that last. That's their tagline, apparently. Not like super trendy or fashionable, just, that kind of stuff. Now, margins are expanding, which is pretty good. They're buying back their own stocks, which is basically returning money to shareholders. And their licensing partnerships are growing as well. And the digital transformation is paying off. Isn't it funny? It's 2025 and people are still talking about the digital transformation. We kind of thought that happened in the 90s, but it didn't in retail. So it's an interesting one. Now, the ticker symbol, LE, and what do you see? You're starting to see a familiar pattern, aren't you? You see a no stability. Yes, right? That's kind of what we're seeing. And we give you one more golden nugget here. And that's that extra purple line there, the 150. When you're above that, that starts to become a very, very good thing as an investor. And we're now nearing here the October 2024 highs on some pretty decent volume after earnings. Even though the headline numbers didn't look very good, obviously what they said looked good. And you could listen to the earnings call, or you could just look at the stock chart. That will tell you the whole story, right? Because the money always tells you the whole story. So we're liking this one. The second one we're looking, which is a little prettier, is Victoria's Secret. Now, Victoria's Secret, show you the chart for it. Here we go. Lingerie, that's probably what you know them for. Intimate apparels. They are reinventing themselves. They're coming out as, they identify as dogs or something. No, I'm just joking. They had a bit of an issue as part of this whole, Me Too and that sort of thing, and they're only putting up these very skinny models and so on. It wasn't really like what everybody was looking for, and maybe they wanted to sort of whitewash themselves a little bit. So they're now an inclusive, body positive positioning. I don't actually know what that means. What is body positive? But more importantly, from our point of view as investors, they're expanding into beauty, loungewear, and activewear. And that's cool. So they've raised their sales guidance. It's a turnaround story, by the way. They had a bit of a tough time of late. Because the whole angel supermodel thing, people apparently didn't like that because, I don't know, they're too young or too female or too, I don't know what. So plus sizes are now there. They have the Adore Me program. That's apparently body positive. You would think putting fit, healthy people out would be body positive. I think the Victoria's Secret models were an absurdly athletic, skinny lot, which isn't achievable by normal people unless you want to live in a shell suit on a treadmill. But I think we're going a little bit too far. But anyway, not really for me to judge. The beauty segment is growing at 10%, which is good. And it's now, here we go, 18% of revenue. And that's pretty good. Raised full year guidance. So the transformation is apparently working. International expansion is up 21%, and some of that new stuff that they're putting out is apparently working. And if you look at this stock chart here, what a hideous stock chart this is. So this is a company that dropped, 70%. Buy and hold, they say. We're gonna get onto the holding thing as well in a moment. And then what happened here? Well, what happened is a genuinely beautiful consolidation pattern. Now, I don't buy the consolidation because this could go on forever and then collapse some more. So we wait for it to break out of the consolidation, break out of the highs. And has it just done that? Absolutely, hallelujah, it has, right? It's a skinny dollar symbol there. That might be offensive to some of you. I will draw a fatter one. There we go. Ozempic dollar and Adore Me dollar. So yeah, that's why. It's a turnaround play. It's above the 150-day moving average line. It's above the 50-day moving average line, which is starting to slope up. Volume was huge along this whole sector here, Right? Look at the volume. Normally they're trading down here in terms of volume, and it's now like way more, which means loads of people sold, and that's good for us. And now they're obviously starting to accumulate slowly and quietly. So I'm liking this one. I'm liking this one. So doesn't mean you need to buy it, but I'm liking it. And then, of course, Winston's favorite. Where is Winston? Winston, you want to explain why Chewy made it onto the list? He says, I've done all my hard work for the day. I'm now sleeping. All right, Chewy, what do they do? They're basically Amazon of pet supplies, which is weird because I would have thought Amazon would have killed the Amazon of pet supplies, but Bezos, the almighty, hasn't gotten there yet. Didn't he? What was that dog food company he gobbled up? Dog.com or something? Anyway, 70% revenue from auto ship subscriptions. Do you know how big a deal that is? That means 70% of the revenue just kicks in automatically because people just keep buying the same stuff for their dogs. Winston is against that. He likes a variety of snacks and treats and food. I actually think it's best to make your own food if you can, but that's another story. But yeah, pet owners never stop spending. We're obsessed. Dog food, cat litters, toys, medications, treats, all sorts of stuff. Caviar, and actually he eats quail. So those little sort of mini chickens. He likes to eat the whole thing. One of his favorite treats. 21 million active pet parents. And AI-powered personalization is increasing order values, expanding into pet healthcare, vet services, which is kind of cool. I'm going to mention this and I'm going to regret this instantly, but I'm playing with something, and this is still an early thing, and it's called Winston.Goat Academy.org, and it's a chatbot that I've trained with alternative health information. So if one of my kittens has a conjunctivitis, what do you call it? Infected eye. So of course you could just give her antibiotics, but the poor thing is little and I don't like antibiotics. So we're cleaning her eye with green tea, for example, and it's doing a marvelous thing. We're also giving her some colloidal silver drops, which is also working marvelously. So if you're into that sort of thing, test this with me. There is it's out, it's live, Winston.GoatAcademy.org. Thankfully, I put this in near the end of the video, otherwise you'll all be using it, and I'm terrified it's going to completely crash and burn. If you hate it, let me know, please, and I will make amends. But it's an early version, essentially. But I think it's got some pretty cool information in there already. So very excited to kind of put this out a bit more, because it's just one of those things I strongly believe in, and we might turn it into an app or something down the road. I think there's a paywall in front of this at the moment, $15 or something. Let me know if you hate it, and I will make you whole again. I think there's a free trial, I think. I hope the cancellation works. Otherwise, we're going to create some admin for ourselves. But I'm a big believer in just make stuff, chuck it out there and get some feedback, and then we'll make it better. But I think I've tested, I've tried it. Like Winston had an upset stomach, for example, and I talked to it and it gave me some very good feedback. So let me know. I hope that gives you guys some value. And this is not just for dogs, this is also for cats. We haven't sort of done rabbits or anything yet, but it's probably fairly similar. Now, I'm going to give you one more, and this is biotech. Now, why the heck biotech? Because biotech is the one thing that really, really, really benefits from lower interest rates. So if you zoom out a little bit on biotech, it really hasn't done a lot. 2021, it was, twice the price levels. So it's really, really not done a great deal. And it isn't just the lower interest rates that are driving this. And I'm not going to give you one of these crazy biotech stocks. I'm going to give you one that's a bit more reasonable. Lower rates, older people, right? I put 2 L's in older, just for good measure. And AI is making drug discovery cheaper. And then we also have mergers and acquisitions are picking up again as interest rates come down. So we're liking the whole sector. Now, the one I picked out for you is a large company, ish. mid-size probably, but most of these biotech companies have zero revenue. So they turn daily injections into weekly treatments. They're approved for rare disease drugs of $1 billion market potential. So they've created a breakthrough drug delivery technology. It's called Transcon, which is a really odd name for a product. But there we go. It's called Transcon. And it's a time release mechanism that makes drugs work longer in your body. So what's the problem they solve? Most drugs need daily injections. Not a lot of fun, right? So the technology turns daily injections into weekly injections, which makes life a lot easier for people with chronic conditions. So they have an approved drug, which is called Skytrofa. I mean, who runs this company? Some like Russian guy who wanted to be in James Bond as the probably, right? Anyway, that's a growth hormone for kids who aren't growing properly. I'm not judging these drugs or whether we should use them. But there is also your Vipath, which also sounds like a Russian drug. This is for people with parathyroid glands that don't work. There are got a bunch of other drugs in late-stage trials for rare diseases, and each successful drug could be worth literally billions because maybe I need something for that lisp. Now the lisp people are offended. I can't stop doing it now. It's silly. Anyway, rare disease treatment gives you premium pricing. Why do rare diseases pay so much? Well, if you're the only company with a treatment for a rare condition affecting, say, 50,000 people, you can probably charge those 50,000 people like $200,000 a year per patient. Incredibly unethical, but incredibly profitable. So their revenue grew 339% in the last quarter. Obviously our Russian Transcon Skytrofa people don't have much ethics. They're announcing they have multiple potential blockbuster drugs coming. The FDA is doing a priority review for CNP. Decision is coming out on November 10th. So put that in your diary if you wish. Is it November 10th? So November 30th, sorry. As a stock, yeah, it looks pretty good. It looks pretty good. It's done nothing for a long period of time since February 2022. That's a really long period of time. And it's really coming to life here. But what entry points did I put up there? 200 to 207. That can't be right. That's the wrong ticker. ASND. There we go. So it looks a little bit better, doesn't it? Yeah. So actually, no, it has actually run up a fair bit already. But it keeps doing what it's doing. So essentially, I think there's two ways to buy this. One, it pulls back to sort of 200 and you're a dip buyer, or it really breaks out above the recent highs, which is about 207. I think both are viable ways of getting into something like this. I'm kind of not telling you to do it. And I think, where are they from? Are they Danish? AS? It looks Danish, right? So Danish, you get free Danishes with that. I like the ones with the apricot in the middle. Was it a peach or an apricot? But yeah, let me also talk to you just briefly about the holding for everything, right? Nothing lasts forever. That was an intentional silence. So don't hold stocks forever. Forever is a terrible time frame. People always ask me, what's your time frame for holding it? When the stock stops going up. Yeah, that's it. Scientific, isn't it? It is very scientific. Okay, so say this stock does what we want it to do, and it goes up beautifully. At some point, it's going to go going sideways, and then it's probably going to start going down. So where do we want to sell? Where do you want to sell? Well, we use stops. I call them profit locks, and we set them below recent lows. So that is where I would sell. I wouldn't do the selling. I'd automate that. If you want to learn that and the whole shebang about how we find these, then come and join me live and unadulterated at felixrenzelog.com/training. Winston will be there, probably some other cats, and we're going to have some fun, and you can ask me everything you ever wanted to know about what I learned about how to make money from money, because that's what this community is all about. I wish you all the best. Are you worried you're going to get caught out by the market crash that will inevitably come because the market moves in patterns? Well, that's what Hugh just told me to watch out for. And in all seriousness, there is actually a structure to predict the market patterns that happens with 90% accuracy.